session of the day, so it's probably appropriate that it's a bit of retail therapy for you all, and we'll continue the discussion over drinks. What I've said to the panel is I'm not going to ask them to introduce themselves. You probably know them all, but when they start talking, they can say who they are. You might also be wondering why I'm moderating a retail session. Before joining Talisi and full-time in the 1st of February last year, I worked with Emerge Developments. We did a number of retail developments, including Safari Centre Naivasha. James Hoddle, who was my partner at Emerge, has asked me to just tell you how wonderful it is. If you haven't been to Safari Centre Naivasha, it's really worth a trip, and you can ask me questions about it, even though I'm moderating the panel. I'm not supposed to be plugging a development of Emerge Developments. What we thought we'd do in this discussion, and welcome to Priscilla, in the session is just try to pick up on some points. It's going to be a lively discussion. I've encouraged the panelists to interrupt each other. So it's not going to be a question and an answer. And we're going to try to start with defining what we're talking about when we look at convenience retail. It's going to be design-led by Andrew. We're going to talk about impact, what the impact is on our bigger, more regional malls and how they reposition themselves if they need to. What kind of retail offerings we're looking at when we talk about convenience centers, what the performance is, and I think quite importantly, as we see, it seems to be a proliferation of convenience retail centers, what drives locational decisions, and what's the impact of this tech, online shopping having on the format of retailers. And Priscilla, the CEO of Java, is going to lead on that particular discussion. So let's start with Andrew, who talk a bit about yourself, but that's a little bit.
Just a little bit.
Just a little bit.
Okay, my name is Andrew Kusewa Kilonzi. I'm director at Bugetman and Partners Architects, and retail therapy indeed. I think, Graham, I just reminded Human, we've been on panels 2 years ago discussing retail again. So I guess I wear the badge, practice a lot in retail. Graham, we did Two Rivers with you. That Safari Centre, as you've said, we conceptualized it. A lot of the guys on the panel, I have a client here, so I need to watch what I say. We are doing a lot of retail developments with them, so I guess I'm a retail expert. That's why I lost my hair. Thanks.
And talk a bit about, now you can talk not about yourself, but talk about what. Sorry, so talk a little bit about the factors that you're looking at when you're looking at designing a convenience retail center.
Okay, so we had this discussion again when COVID disrupted everything. And at the time, of course, factors considered by developers when you're looking at convenience retail were always around location, location, location. So one of the things that has changed very recently is now the dynamics are different. So there's a lot of disruptions that have followed, from COVID. And one of the things beyond location, we are seeing a lot of developers who have a totally different approach in terms of how they're doing convenience retail. So beyond location, what's the nature of the retail that you're developing? We talked about developers who are doing one-level walk-ups in areas that are dense. Parking is not as much of a requirement because the shoppers are walking up to the retail developments. Again, a very different consideration from when you're developing a big retail center like Village Market. Now we have a lot of developers who are doing that. They're looking at what are the dynamics of the neighborhood that you're developing your convenience center. We have a lot of developers who've approached us, and they have a very keen focus on ESG goals, and are they going to be also providing retail in areas where they're also contributing more than just the retail experience to job offers, catchment in the areas, totally different dynamics. So those are the things that I'm noticing are a change. Again, the other thing that has become big is on online shopping, and we'll talk about it a little bit more, but again, what does that affect in terms of choosing your location for retail? Very major consideration.
And Andrew, do you think you're seeing a proliferation of people wanting to do convenience retail? Is it a growth sector?
So it is a growth center, and of course, Graham, you're sitting here, and we talked about convenience retail with safari centers along the major highways. So that deals with convenience. It's travelers, they're driving. Where do they stop for shopping? I think one of the biggest disruptions that we dealt with at Safari Center is an anchor called Loo for You. So the toilet is an anchor now in a retail development. But that touches on convenience, okay? Then there's been also a very big move where we understand the gap in our planning circles. So a lot has been said about residential. I've just seen the presentation by new developments right now. And yes, in South Africa, you do a master plan development, and you have within your master plan development a provision for a retail center. Now, in our own environment here in East Africa, was there any provision for that? So you're finding a lot of retail developers for convenience are disrupting what was planned. Yes, there was no retail offering in a residential master plan. How do you carve that out and lead in the planning by providing a convenience retail? So, yeah.
And Ashmi, what are your tenants saying about convenience retail? What kind of tenants are looking to go into convenience retail centers? And do you have any sense of whether they perform better in the traditional malls? Are they performing well in the convenience centers in terms of trading densities, turnover? So is there a different kind of thing you look at when you're putting together a tenant mix plan for a convenience retail center?
Okay, thank you, Graham. Just to introduce myself, my name is Ashmi Shah, and I'm the Retail Portfolio Manager at Knight Frank. In terms of the tenants, whether their preference is convenience retail or a traditional mall, we are seeing more and more tenants wanting to go into convenience retail, but we still find that there is a lot of tenants who still want to remain in the big malls. And I think one of the reasons is because the big malls basically still have other tenants, they have other brands, and tenants want to continue to go to that. They want to go there for the entertainment. They want to go there for the F&B as well.
So, and is it different types of tenants that you wouldn't put in a convenience retail center?
Yes, there are. I mean, there are other tenants that you wouldn't consider for a retail a convenience retail center. Something like fashion is something you wouldn't consider. But some of the tenants that you would definitely consider for convenience retail is a smaller supermarket format, which is your 300 to maybe a 1,200 square meter space. You would consider your opticians, your pharmacies, a coffee shop possibly, a small gym. You may consider a fruit and veg, maybe a tailor. So basically anything that's convenient and you want it to be in a one-stop location.
Okay, thanks. So Human, what's the impact on you?
Well, the theoretical impact is that, my name's Human Hassani. I'm a director of Green Hills Investment, which is the developer and owner of Village Market, which is a shopping mall in Nairobi, one of the larger ones. We have about 260 outlets now, sitting on 11 acres. So we're certainly not the most convenient location to get in and out of. So in theory, there should be an impact because people want to have, they're just at a faster pace. There are times when you want to get in and out of your shopping or getting done with your shopping list. And so, a hyper convenient location would compete in that sense. What we're seeing in real life is that there's still, because of other factors, there's still a demand, even from people who are in and out of a mall very quickly, there's still a demand, or what we see is a higher demand to be in a traditional mall. And part of that is elements related to security, options. So even in locations where hyper retail or hyper convenient retail, like let's say Raptor Road, have come up and have been very successful, I can't help but wonder how long or when that model might change, because it's convenient once a week, maybe, or twice a week. It wouldn't be convenient to go there every single day. You'll get tired of the same food. You'll get tired of the same options. And so we're seeing malls still provide, the larger malls still provide that daily or more frequent solution for a lot of shoppers because of the options they serve, because of the level of facilities, and because you have things like recreation and other elements, like in the case of Village Market. The one question I have also is, in terms of the longevity of the model, there's nothing more convenient than having something delivered to you, right? Than using your mobile phone to do your shopping. So if you're looking just for convenience, technology will eventually, potentially, kill that model.
Potentially.
It's an issue that has...
Theoretically.
Yeah, it surprises me often because what we're talking about, when we talk about convenience retailers and what we're seeing here, they're mostly the new ones. And William, I want you to talk a little bit about this in terms of location. They drive to. They're not necessary in higher density areas, places that you can walk to. That tends to be occupied by more, the less formal retail. And our formal retail in Kenya, I'm told that penetration is only about 30% of people who are shopping in formal retail. So outside of delivery, and we'll come to that because I think it's had a big impact, outside of that, I'm interested that we're not seeing more ground floor, formal developers, formal retailers in ground floor retail. And William, I know your clients include some of the bigger supermarkets who've sort of pioneered a bit of the convenience retail. Maybe you want to talk about that. They started in, like Quickmart started as a walk-into kind of supermarket, and now it's more of a drive-into in terms of their new developments.
I don't know how to switch it on. Yeah. First, I want to say my name is William, as you've heard. William Kimaro. I'm a designer by profession who has actually never designed anything they've never built. So I am a contractor, designer, design and build kind of thing. In retail, I've actually been in retail almost the whole of my life. I have been involved in 2 projects, and they're both retail. One was a 9-year-long one with Butter Shoe Company. We all remember Butter Shoe Company. And I was when they wanted to revamp, they called me in. I was a young man that time. And well, we've grown I worked there for 10 years. I designed and built and changed the whole brand at the time. Then I moved on to a bigger client who I am still with now, that is Quickmart. So I design and build the Quickmarts around the country. And it's taken me to another level of retail now. And as you say, we've grown from what I can call 2 stores to 58 last month. So as he says, I think the development or the decision is a very, very fluid. It's very fluid, and it's driven by the retailer, first of all, wanting to know how much am I going to make for how much I'm going to spend at the point. So, and that's why you'll find the location, or the locations that are chosen have to do with how much are we going to make and how much are we going to spend. And it's very fluid because unless you go there and visit, you walk around, you have to go there in the morning, see how, the traffic is, see who the people inside the cars, are they mad? Are they happy? You go at lunchtime, just see the flow, go in the evening, go on a Monday, go on a Tuesday. So you have to do that study. And it tells you the pattern of the customer you're trying to get. So you see, I've been working for Quickmart in the last think, 8, 9 years. And as we've grown, we've changed the way we research. Before, it was more of a gut feeling. Aha, there's a mall coming up. We need to be in the mall. It was a mall culture. But right now, you have to really feel the customer. You have to think like the customer. What is the customer going to spend? How much? So then, this customer is going to be in what area they're living in. So if you look at where we're moving now, we're moving to the, I would not call them high density, but I would call them high basket value areas. And high basket value areas are the Kileleshwas and the Westlands and all these areas where someone is going to get into a shop and spend a certain amount of money that justifies the development. So on the other hand, we are still trying to go to those low, high density areas. And you see the model we have there and the model we have on the other side in terms of construction, because I'm in construction. In terms of construction, we try and deliver the same standard. So even when we choose a location, we must ask ourselves, are we going to be able to get the correct, are we going to be able to maintain our standards as developers, as retailers, or as developers for retailers? For a retailer who we have now become, you become partners, and you know exactly what that person needs, exactly what that retailer needs. So we have shops in both areas. The upper basket value areas where people are going to get into the shop and spend 2,000-3,000 shillings every other day or every day or every 3-4 days or once a week, to the areas where someone is going to spend 100 shillings. We have to deliver the same. So what we change sometimes is the merchandise. But at the end of the day, nowadays we find everybody wants to enter a setup where they feel, oh, it's so wow. Or if I go to a Quick Mart in Kileleshwa and I go down on Outer Ring Road, I have the same feel. So at the end of the day, you must consider how much you make versus how much you spend.
Graham, if I may add, you just talked about formal retail as not being present in areas that are high density areas. So that's a perfect example. Is Quick Mart not being, previously they were not a big formal retailer, but now they are the formal retailer who's actually setting up supermarkets in areas where formal retailers wouldn't go. Maybe William might talk to it about the design, language of a Quick Mart. It almost replicates the informality in some instances that you'd see in these high density areas that we used to find. Of course, at a higher price, but it does replicate it.
Okay, before we come back to William on that, the first coffee shop I went to when I moved to Nairobi 10 or 11 years ago was a Java. And I think Adam's Arcade might have been the first one. It was a wonderful experience. We're very happy, Priscilla, to have you. But there's been you were talking a bit when we spoke about the sort of history of Java, where Java chose to be, and maybe you could talk a little bit what's driving your decisions now about where you choose to have a Java, and how the shift into more convenience retail is affecting you, but also to talk a bit about how that might affect the format of a Java, particularly if it's a convenience retail center anchored by a filling station. Does that change your format if you're looking at that?
Yeah, so thanks, Graham. I'm looking at Ashmi because I think she's been through this entire journey with Java. So I was listening to everybody, and we pretty much play in all the spaces, right? So we're in malls, we're in fuel stations, and the format changes. So a recent study that we did about the consumer and what the consumer wants, and I think that's what William was speaking to, convenience is a real piece, and you will hear it from all the consumer research that is coming in. The difference with Java, I think like Ashmi said, so Java is whatever you want it to be. So you'll find the big malls where they're very successful over weekends because people go in, they'll go to the supermarkets, and then they'll have a meal with their families. And then we have what we call our strip mall concepts, which are quick in and out, but you can have a meeting, you can close a deal, and that's it. And then we have what we call our express formats, and those fit anywhere. They can fit in a fuel station, a college, a hospital, and again, those are quick in and out. So what we've learned is we have to play in all sectors, including online shopping. So we have, the advantage of really being at the forefront of what that consumer is looking for. And so when we always say Java can be whatever you want it to be, we always joke that if you want to come in and have a quick breakup without any drama, you pick a certain Java, because you will be in and out, and you'll break up with a person and you'll be out, right? If you want to close a deal, if you want dinner with your grandma. So that's one of the things that we have managed to do quite well, is to understand what that consumer wants. When we talk about convenience, what we're seeing now with the future is including partnerships with the supermarkets. And this has been done in the past, right? So, and also the fuel stations. And this is more of your Java on the go, that you can stop, pick up a coffee, and leave. But there's a piece that we're not addressing, and that's educating your consumer. So for us, we're not fast food, we're casual dining. So if you want your chicken curry fast or convenient, it doesn't work. But that requires us to understand what products can be convenient and which ones cannot. So I think William was talking about it, we have the luxury to tailor-make our menus depending on location. Certainly not price, because what we've also noticed when we talk about convenience and the consumer that came with their family to Junction for a family meal will end up at a CBD restaurant for a meeting. So they will realize that the price is different. So pricing, you can't play with pricing, but you can tailor-make your menus depending on your location. So all this to say about convenience is, I don't think that it will go away. I just think that the formats will change based on the consumer. I also think it's cyclical. So in our 24 years of existence, 20 years ago, fuel stations they only wanted to sell fuel, right? They weren't making money, and so they decided they needed to be landlords. And so in the last 15 years, you saw a lot of food offerings in fuel stations. So I do think it's cyclical. I don't think it's the end of a big mall. I agree with both of you that there is a place for it, but I think the consumer has different touch points depending on what they need on that day. So I just think it's going to be quite the marriage, and there are just going to be certain days when one is winning and the other isn't. But I think overall, it's going to work quite well, particularly for this market.
Thanks. So, just talking about this changing nature, the big impact we're told has been, and Human raised it, I think, the whole question of online shopping. And have you, Human, seen that affect you? And are any or many of your tenants starting to use their shops as just a showroom or the front of house, and actually they're increasingly using your shops as warehouses or storage for their online operations? Are you starting to see that in the bigger malls?
So we're, again, that's theoretically what we expected. What we've started to see, just because maybe, we're in Kenya and it's a different model, shopping model, we've actually seen people who have been traditionally online and on social media actually taking shop fronts now.
Instagram.
Yes, and
Shop.
actually having a physical presence. So there's somebody who he stocks all the IKEA items and was running a very successful business through Instagram, but said, no, I need physical presence because people want to see and touch and feel, and because there's that trust element still. But also, when you walk into a shop, you often walk out with more things than you expected. and things that you never knew about or never thought you would want or needed. So, and I mean that's how I end up in every IKEA. So that's we haven't seen people use the shop so much as because that would be expensive shelf space. That would be expensive storage space. We're seeing them adapt the retail elements and their shops, and we're also adapting as a mall. We made a decision about 5 years ago we put in total now we have 45 food outlets out of 260 stores, which is a lot. But that actually was what saw us through COVID. It's what sustained us throughout, because as a lifestyle center, people still want to come there and just spend time.
The mall rats need something to do.
That's all they
Ashmi,
do.
have you seen tenants reducing their space requirements because of online shopping?
No, actually, I was going to say, when I think when in the COVID, when COVID came in, and I just want to support my village market as a director here. These strip malls were not there. There was a time there were no these small strip malls, and everybody went to the mall. In fact, you used to pride yourself in being searched at the gate. And you say, I want to be searched, man. Just search me. So, and then there was this COVID thing and online. And still, even with all that, we have seen the rise of strip malls. First there's COVID, so it's promoting online shopping. Then there's the malls, you have to be searched. And I think it's also a culture thing. So I do not believe that retail, convenience retail, is going anywhere. In fact, I believe it's going to rise and rise and rise.
And Ashmi, tenants responding to online shopping with smaller size requirements?
I think what we also saw post-COVID was, during COVID as well, is a lot of the smaller retailers who never had online presence started to ask us the questions as to how can we, have a website, how can we have our social media pages. So we had our marketing teams assist them to set up these pages so that, because as we saw that more and more people were doing online shopping at the time.
Yeah, and I think for us, just to add to that, I think everybody has talked about COVID, but now your competition is slightly invisible. So for us, we knew who our competition is. I mean, I think we can all name, who are your competition in F&B, but everybody could have a kitchen in their home and sell out of their home and deliver. So I do agree that mall space is too expensive for online shopping. But that doesn't stop everybody from stocking their apartment or, a warehouse. So competition has also changed in convenience, particularly in our line of business. We have found that growth is coming from what we would call non-traditional channels. So our traditional channels is obviously the restaurant where you come in and sit, but growth is coming from other than your traditional channels. And so you can't ignore them, and neither can you ignore the competition that's coming from that segment. And it's not only just online. When we talk about convenience, I'm listening to Quick Mart here. They've developed quite the deli section. So in food, it's not just online shopping, it's not just your restaurants. It's now when you go buy milk and bread, you can actually buy your dinner. So convenience doesn't always look the way we imagine it to, but the supermarkets have also realized that they have convenience inbuilt. And so that's direct competition where it wasn't competition for us before. Yeah.
Graham, if I may add, and it's more of a question, really, how much convenience is too much convenience? And it touches again on, differentiating yourself as a developer. So currently we are designing on Nyali Links Road 2 convenience centers. And one is differentiating themselves by being a 24-hour center. That's basic retail. They went back to the basics. okay, shop all times. And then again, as a disruption, maybe because of COVID, you don't want to be in a space where there's too many people, so you choose to shop at night. So that's a differentiator for one of the developments we're doing. Then the second differentiator is you have on the same street, you have another supermarket that is priding themselves on reducing the footprint of the store because they're going to focus on online shopping and deliveries. And again, it touches on what William said. Will convenience retail end at some point? I mean, before we looked at, there was a time in 2012, Two Rivers, Village Market expansion. There's so many big malls that were coming up. Then that has slowed down. I think from our end as designers, the last time I did a big mall, geez, 12.
Was Two Rivers.
Two Rivers, exactly. So, but the last 1 year we've done 8 convenience centers. So there's a rise on all these convenience centers, but again, it's key. What's your differentiator? Some guys, their differentiation is 24-hour shopping, and then you touched on online shopping. It's interesting to see, an anchor come and from history, what the size of the anchor should be within a certain area, especially if it's convenience. They cut it down by half, and they tell you our differentiator is online shopping. We want to have space, not for parking, but for border pickups and all that. So it really is changing. And the question that humans should really be the one looking out for is how much convenience is too much convenience? Because at what point are we going to saturate that convenience market? And then it goes back to destination or
Actually, the one question
malls
I
and
have,
shopping.
which is going back to both of you or to everybody, is when is it going to change to even more convenient, which is when we start seeing ground floors of buildings being used for retail and F&B. So you go to Bangkok, every corner there's a 7-Eleven, every corner there's a coffee shop and probably a massage parlor, right? But it's all super convenient, and so they're making use of that ground floor. So here I know we have problems of security and other things, but at some point that has to change.
I think it's an interesting point because you see some centers that are defined as convenient retail centers that are quite heavily bulked because of land prices. So they've gone up with the levels of retail, which is fine for big malls, but it ceases to be convenience, whereas you could be doing residential. And we don't see, except in informal retail, and with the small container malls in high-density areas, you're not seeing the corner shop or ground floor retail with residential above it. Is that something that you would look at, William, as Quick Mart?
Yeah, but ask that question again. I want you to ask that question again.
Ask it.
Again.
You
Ask it again.
Oh, no, what I'm saying is, what picking up on Herman's point is, where's the corner shop? So you find it in what we call high-density areas, sort of less formal residential, the tenement areas where formal retailers, except maybe Quick Mart from its early days, have not really gone in there. But you're not seeing it in other areas, and you're not seeing it in new retail convenience centers where people are thinking, instead of stacking retail on top of retail on top of retail, start putting another use on it. Herman's done it. He's got 2 hotels that must support the shopping center, but we're not seeing it, I think, when we talk about convenience retail, real convenience. Walk to. I can't walk to a shop to buy a packet of cigarettes, and by the way, you need to put a smoking section into Java. So that's the question, William.
Well, let me first say, first thing is that as developers of QuickMart, we're trying to change that. We're actually trying to change that because, yes, we realize, and unfortunately, there's a size, there's a minimum size with which you can get a return on investment, especially for developers of our kind. But other than that, there's a very big, and I had mentioned the word culture. If you go down this highly dense, do you know that the guy who is operating his retail setup, the amount of return he needs, I don't know whether I'm answering, because the amount of return he needs on whatever he has invested in is so little you cannot compete with that person. And that is why you find if you go down to streets in Umoja, you'll find 15 M-Pesa shops. You turn and find 100 nyama choma joints. And sometimes I keep thinking, the culture that we have is, I want to go where people, I want to crowd. I don't know whether that is good enough. I want to crowd. So it's very difficult for the formal retailer to go there and make anything. And it's something we have tried. It's something we have tried to even, and as you've heard, it's impossible to reduce your price. It's completely impossible. But you still want standards. And now, you know, some of these retailers have international links. You know, one of your biggest investors is a firm in Mauritius and all these equity investors, and they have standards to keep. And they have profits that they expect to get from in a certain point of time. So the formal and informal can only be, I think, assisted by empowering those people to earn more and raise their standards and start attracting better situations around them. You know, one of the things we always look at when we're looking for development is, are we going to be able to maintain our standards when we develop at that location? There are places we go and you realize no matter what you do, you'll have, the day you put Cabro, you know, you just clean up and put, oh, coming soon and everything. In front of you, there'll be 100 guys lining up, you know, merchandise. And it's impossible. You cannot chase them. They're strong. They have a very powerful, you know, it's impossible in some places. So I don't know. The formal can only be pushed into the informal, you know, sectors with time and people empowerment and more money in their pockets and more jobs. That's what I think.
Very good. Andrew? Then I think I'm looking at this
Can I
clock.
just
We
add
need
to
to
what
wrap
William
up
was
and
saying?
go and
So-
drink and carry on the conversation over a drink.
I think we need to move to convenience drinking. But yeah, so just to add to that point, me, I'm a very big proponent on regeneration of neighborhoods, right? And if you look at an area like Ruaka, yes, Quickmart was there, but beyond Quickmart and what they were trading on retail, what happened around it? Apartments, residential. So there was a time when greenfield developments were doing mixed-use developments where you stack up resi, you put a hotel, and you have your retail. That's what you develop. But what happened very organically is in a place like Ruaka, you had retail, but everyone else was developing resi around it. So I think there's also a shift for retailers who have been in informal areas to then go back to that idea of the corner shop. But now you're a formal retailer. What do you do to add value to a development you put up a few years ago? It was 2 stories, talking like Quickmart Ruaka. Then everything around you has gone 15. So I think as part of retail also following the regeneration trend, we've seen a lot of retailers who initially started as you know, a supermarket anchor. Now they have purchased the land around them and they're putting up residential developments. It wasn't greenfield, it was a created value. I purchased the land around me. I'm putting up apartments as well so that I also benefit from this mixed use environment. But I started with convenience. So you're borrowing the model of the corner shop because that's what happened with the corner shop. It was always resi, offices, ground floor retail. It's a corner shop. So, but this happened in reverse. You did the convenience retail a while back. Now you've seen how things have grown, you know, organically, and you regenerate the neighborhood. You also put up residential developments.
Nothing to add? Okay. Ashmi, last chance. William? Oh, have we got time? Good. Lots of, yes, questions, please. And then I want Priscilla to tell us in terms of cyclical development where Java will be in 5 years' time at the end.
Hi, thank you. I'm quite interested in retail, so I enjoy sitting and listening to the dynamics of retail. But I was quite interested, Ashmi, when you said that convenience centers do not have an element of entertainment. And from what I've seen and a little bit of what I've experienced is that post-pandemic, some developers in other regions have started to implement an element of retail in their convenience centers because that's defined by the size, right? Waterfall in South Africa that precinct have got pockets of convenience centers that actually have quite a lot of entertainment in it. But are you saying that for the East Africa and the Kenya region, that hasn't started yet, or there is no inquiry by developers, or there is no inquiry by the entertainment categories that want to go into convenience centers instead of staying in the supermarket region, super regional centers?
Thanks for that. Sorry. I think in Kenya, or rather the East Africa region, we don't have it yet, but I think over time we may have the inquiries on it. All the smaller developments or the convenience retails that we've done so far, there has been no inquiries either from the tenant side or the developer side. But like you said, over time, I think we may find that there might be a little bit of entertainment requirements depending on the size of the convenience.
Pumi, can I also add to that? So one of the things I've seen, entertainment is a major footfall puller, right? So I'll go back to Links Road again in Mombasa. So we've done 2 convenience retail centers that are right between, what is right between them is Waterworld and Mamba Village. That was an entertainment place. Now, what I've noticed, guys go park because there might not be enough parking at the convenience retail. They go park at the entertainment place, they spend money at the entertainment place, then they go shop. So what guys are doing, of course, it's a lot of capex to put up an entertainment space. But so, again, location. You see it's available, it's not benefiting from footfall, both from retail and vice versa. So disruption, you develop convenience retail next to it to feed from there. Footfall you're gonna get from entertainment. So I'm seeing a lot of developers who, in selection of sites, they're being very proactive in noticing that entertainment is a major, pull on footfall that might benefit the retail.
All right, yeah, so thank you. My name is Shadrach Mela from JLL. So before I ask my question, it's more related on the investor side of things. We talked to a couple of investors, mostly looking to invest in property in this market. There's a few funds, Sub-Saharan Africa focused outside of South Africa, based mostly out of Mauritius. Now, I've speak to them regularly, and there was one I spoke to today, actually, and they're very interested in good quality investment-grade assets in this market. Most of them want, of course, dollar leases. They want strong covenants. But that means they gravitate more towards office and good quality logistics. Every time I mention retail, it's out of favor, yeah? And what I noticed is there's a lot of, there's very minimal interest in retail. And Andrew, you've sort of painted the picture why. You've not done any major regional center since Two Rivers 8 years ago. You've done, I think you said 8 or 10 convenience centers recently. Now, in trying to understand some of their issues, what I came to notice was measuring performance of retail centers in Kenya is a bit tricky for them, yeah? And the feedback I got from one of them is, because our market is not very mature, they're not able to look at some metrics. We don't collect some information. And I know now this is a question that's gonna be very direct to maybe Human, maybe Ashmi as well, Priscilla as a tenant herself. We saw after COVID, a lot of tenants moved towards turnover rents. After that, they were struggling with their base rents, and now they could come to their landlords and say, it's becoming very difficult for me to pay. I'm only comfortable with paying you 10% of my sales as rent. What I've noticed from studying markets like South Africa is it's become like market standard to collect data on turnover, footfall, and not just footfall, but now with turnover information, you're able to get a metric on, spend per shopper. Yeah, you're able to get information on trading densities, how much a tenant selling per square meter or per square foot. You're able to get information on their occupation cost ratios. What portion of their turnover goes towards rent. So, I mean, do you think that is something that will help improve our market? Because it's something that has not come up, in my experience, once. It's come up a couple of times. So is that, Human, is that something that you see a challenge from your tenants in terms of collecting that information? Is this something they are more comfortable sharing now? Ashmi, is it something your tenants would be willing to share? And Priscilla, is that information you're comfortable being out there with your landlords? Thank you.
So from the mall's perspective, it would be the right direction, certainly, and it's something that we've been exploring. The technology angle has to come in first so that you can support your claims. So we're doing that with our largest retailers, with our supermarkets, where we have some sense of measurement and then some sense of profit share or rental yield base that we work with them on, and they're happy to sustain that because they've worked on that in other markets. The traditional retailers in this market have always been worried about reporting for obvious reasons. So they really don't want to give out too much information, and if they do, it's never going to be accurate. So it never worked for us. We would always we would be doubtful of those numbers. But eventually it does have to change because the retailer, the mall and the retailer have to be aligned, and you have to have a common interest. And so, for us, our revenue channels are really a 6-year lease and then parking. And that doesn't give you much incentive to invest or do much week to week or month to month. You're kind of, you've signed a lease for 6 years, good luck. And we're just going to collect from you. And of course, we have more of a vested interest where we have entertainment, recreation elements as well. But that model has to change so that you have a daily incentive to bring people in, and that means you're marketing and you're improving your product, you're sustaining your product. So we have to move in that direction. But we also need an institutional solution. We need a Knight Frank or a JLL or someone to come in and say, these are the numbers that make sense. This is why it makes sense. And it makes sense for everyone. And then somebody has to implement that. Right now, it's kind of a guessing game.
Yeah, and just to add on what is said, I want to tell you that is the good side. That is the positive side. That's how things should go. But I want to just paint a picture of a history, a small history that has just... you remember there was Nakumat, and there was Tuskys, and there was Uchumi, and there was the Tumaines, and all this. And these guys suddenly died. And what happened is that now the malls or the buildings that they occupied were left vacant, and also they were left vacant for a long time because there was also a lot of court cases. So what happened after that is that there was a lot of uncertainty, even when you want to invest there, because okay, so this one has closed, and another retailer quickly opens next door there as you guys sort out your mess, and everybody moves from here to there. So there has been a lot of, in these buildings, there's been a lot of tenant-retailer agreements on turnover. I have seen that. I don't know whether you've seen that. On the former Nakumat spaces, former Tusky spaces, these guys go and say, now you know how much was Tusky selling, how much, and you realize the developers or the landlords already know how much they were selling, or approximate, or what they heard they were selling. And when these new retailers come in, they want to know, okay, I don't trust your space anymore. I don't trust how much we're going to make out of it. So let us have an agreement that if I make this much, I will give you this much. If I make this much, and it's happened in the last post-COVID, last 1 or 2 years, we've seen a lot of that as we develop. And we also find that those spaces, even after that, you find those spaces have been cut in half, or I'm going to take only the ground floor. If I make this amount, then I will move to the first floor, I'll add more product. So that's the negative side. But I'm sure it's a way to go. I mean, if you have like a large mall, like, you know, like village, you want to make sure it's never empty. Yeah.
Shadrach, maybe another thing to consider. Do we have the infrastructure to report on this turnover? So we were talking about it earlier. Online shopping. How do you report that turnover? So if I do a turnover list with you, and the only thing I report is is at the till, how do you know my turnover is not higher from online shopping? And maybe that's something in more mature markets, is something that is more structured and developed. You just said right now, retailers are not telling you what their turnover is, or they're not reporting it directly. So the other complication that has come in is it's online shopping. So if I show you what I've registered at my till, you don't know how much I've made online. So where's the turnover discussion in that whole thing?
I mean, I think probably I know our finance person is here, so she's probably censuring me. But it's interesting, this discussion, and I think Ashmi and us, we've had this discussion. So we have been at the forefront of turnover rents for quite a few years. So we started doing that probably over 10 years ago. Now the difference when I listen to the developers and the landlords is trust, right? So it's funny when you say, you know, what kind of numbers you're giving, and I'm thinking, is there an option about what numbers you give? I mean, you know, you give your numbers. So I think it's trust that has been developed. So we've been doing this probably close to 15 years, and it's worked well. And it has also been extremely helpful during the COVID years, because you have built that trust with your landlords over time. And during COVID, I mean, I have to say that if it wasn't for those relationships with the landlords who understood what your potential was and this crisis, then you're not able to then go back to the landlord and say, you know, we all have skin in this game, yeah? And it's mutually agreed distraction if we don't work on this. So turnover has worked for us quite well, and it's obviously worked for our landlords as well. But when there's a non-performing retail space, then there's shared ownership that it must work because of turnover. I don't make money, you don't make money. But in our space, it's worked quite well. Ashmi.
Thanks. I think what we have seen as well is tenants, more and more tenants are starting to ask for turnover rents, including the smaller line shops, smaller tenants. Those that are not even branded are starting to ask for that, and that's obviously post-COVID. But like it said earlier, I think the issue of getting the right information, right numbers is something that we need to work towards. I think over time, as more and more tenants give us that data, we should be able to establish some standards that we can follow as in the East African market, and then maybe even compare them to the South African market.
Thank you. I think it's drinks time. I think it's an important point. We need more data to be able to understand how we design our, whether they're big malls or convenience retail centers. And before you cut us dead, I did say that Priscilla was going to tell us what it's going to be like in 5 years' time, particularly for food and beverage. And then you can all go for drinks.
I think Graham is asking me how the sausage is made and asking me for trade secrets. No, I think one of the pieces we didn't discuss today was urbanization. And I know we talked about high density areas, but Kenya in particular, at least for us, we have seen that there's a lot of growth in out of Nairobi and out of big cities. And I mean, I do understand from a developer's point of view, I mean, how many malls can you have in Eldoret? But from a retailer point of view, there is a lot of value in moving out of, you know, your traditional big Nairobi locations. And it's that question of getting closer to your consumer. I do think, you know, whichever side of the government you're in, I do think this county government thing, we will see it developing quite a bit. And there will be consumer with high spend, as you talked about baskets, you will see that there will be consumers with high spend in some of these markets. We recently looked at data and we found like Kisumu County outspends Nairobi in F&B, okay? Whereas Mombasa, underspends, yeah? So there's some very interesting nuances in what the counties are doing. So when you talk about what Java is going to look like, without state secrets, they're here. I tell you, you wouldn't know who they are, but they're in the crowd. We are looking at what does that mean to us outside of what traditional was in the traditional channels, but convenience is a big piece. I think things like delivery, and particularly food delivery, we are seeing that there's some of our stores that upwards of 40% of their sales are delivery. So then we start having those questions of, does that store have to be in a mall? And can we still serve that community in a cheaper environment with the same product? But different models. I mean, I think there's going to be a lot more smaller models that can fit in different places. I do think we still have quite a few malls that we could go into. High Village Market. So I do think there's, as I said earlier, we play in all the spaces, and I think there's comfort there in that we're not a one-trick pony, that we're agile enough to listen to the market and go to all the spaces that are coming up.
Thank you very much. I think the only conclusion we can draw is this is retail is very dynamic. And I think tenants might just be a little bit more dynamic than developers, except for Village Market and Quick Mart. So thank you all, and the conversation, I hope, will continue at the drinks.
Thank you very much. Thank you, great. And thank you to the panelists. Asanteni sana. You may walk off now. Feel comfortable. Thank you very much, everybody, for